Three, two. Hey, good afternoon. It's Mike with your host of Insider Secrets, brought to you by My Core Intentions. Glad that everybody's here this afternoon. And let me ask you, have you been thinking about your real estate intentions? Matter of fact, your personal intentions. What's your why? And why does that matter to you in your life and your business? At MCI, we invest in our clients' future through educational platforms and teaching you how to create short-term cash flow and long-term wealth, empowering you to create sound real estate investing and property management principles while living a balanced quality lifestyle, developed on a strong foundation of practical principles. If you're looking for some direction, My Core Intentions would love to help you with that, exactly by guiding you and helping you discover your why and designing that balanced life. I have to give a shameless plug right now for my newly released book, Exit Plan. But go to the website today and get a copy for yourself, because it's going to cover a lot of that. And it's going to cover those principles and how we balance our life and what we look for as far as investors go. But I'm excited today about our show and our guests. I don't have one, but I have to bring two on, right? And these guys have become a couple of good friends. Mark Seither and Josh Saunders with Kingsview Wealth Management. And let me just tell you, hey guys, why don't you say hi real quick first before I introduce you?
Hey everyone, Mark, and I gotta correct you. It's pronounced Seither. I'm not faulting you for it because it's spelled incorrectly. It's actually my fault. It's an old German spelling, so it's Seither. But glad to be on the show. Super awesome to be here.
Good. Thanks for being here. And I apologize about that. Jeez.
Dude, everyone gets it wrong. Yeah, no fault on you. Oh, I think Josh muted himself.
Josh, I think you're muted.
Which is perfect.
It's perfect. Yeah, it's the best way to. So, Mike, the funny thing about his name is even when I ask Siri to call him, Siri calls him Mark Seither. So
yeah,
don't.
Oh, that's funny.
That's how you know you got it right.
Yeah, I've really found that Siri knows a lot more than me. So really. So
yeah, no, we're excited to be here and talk about real estate investing and how that plays out into a great financial plan. It really does, and we think it's a really, really important core of any good financial investment strategy.
Well, good. Let me give just a brief intro on you guys, and then I'm going to give you guys the floor. So, Mark grew up in a home, gaining experience as an extensive with an entrepreneurial entrepreneurial background through his family business, which was in the lumber and sawmill business. He completed a Bachelor of Arts education degree in economics at San Diego State University and began working as a financial advisor right after that. As Mark honed his skills as an advisor and planner, he looked for a platform that would better serve his desire to work with clients needing advanced planning. When Mark's not working, you can find him hanging out with his wife, hiking the local trails, and searching for new eateries and breweries around his area, making frequent trips up to Lake Tahoe. Mark, that sounds like a lot of fun. You're going to have to come out sometime and hang out with you guys.
Yeah, I should update that because with kiddo number 2 coming 2 months ago, I don't know if I'm going to be doing much hiking here in the short-term future.
Oh, geez. Well, it might take a little stress off too sometimes. So. And then Josh is passionate about helping business owners minimize their exposure to lawsuits and credit attack. He serves as a risk and financial management for his clients' personal and business affairs. He's worked with one of the top assurance firms in California, learning that the value of adding different tax and risk management strategies to his clients' estate and financial world. He's got a Bachelor's of Science degree from the United States Merchant Marine Academy and a Master's in Business Administration from Texas A&M. Josh is a closet tech nerd. I love that. I've been waiting to say that all week. And, he serves on the board of directors of the Sky Mountain Christian Camp and volunteers at his local church, coaches soccer and basketball. Hey guys, welcome. I'm really glad that you're here. And I know that my listeners are going to gain a lot from your knowledge and your experience. One thing I want us to remember is that, this show's titled Insider Secrets. And what I want to do, and we tend to do, is we take professionals like yourself and we really hone down and make the skills manageable, not only for the new investor, but for the seasoned professional who's going to get the most benefit out of what you're teaching and what you're talking about. So what I'd like you to do is, Mark, if you want to start, and just start with a little bit of background about yourself and how you got involved in real estate and your passion around it.
Yeah. And so I guess to go back to, just my original, kind of original beginning of having a family who worked in the lumber industry, and my dad did specialty lumber work and log work. Really kind of what sparked my interest in just seeing how things worked financially is my dad did something that most people, I don't think, have the cojones to do, which is he moved from, Minnesota back to this small town, Valta, California, and he bought a piece of land. He took a chainsaw and started cutting trees off the land and bought a sawmill and milled the trees into lumber. And we, built a house from scratch. But Lehman Brothers did own a note on the house. And when they went out, so did we, right? Like we were one of those people who got that notice on the door, like, hey guys, leave, and it was dream home, beautiful home. And it just, that's an emotional roller coaster, right? So that really got me thinking, like, man, I wonder how things actually work, right? I wonder how, and that kind of led me to, kind of the financial planning world. And then where, Josh and I, kind of honed in on the real estate side of things is, you're looking at all these people who built wealth, and so few of them did it on Wall Street, right? So few of them were like, how I got to the top? I picked an investment portfolio. That's it. And we really started honing in on there's tax strategy here, right? There's tax leverage, there's leveraging, there's cash flow, there's all these things that we can do. And we started, looking at ways that we could even pull money and move money from the investments to maximize the benefit of both the investment and the real estate world. And that's really what had us head into the direction of, we sound like the world's worst investment advisors when we're telling clients like, oh, it's a really good investment. Get it out of my book of business and go get into real estate. Like, pay me less. What are you doing? So that's really, and Josh and I have known each other forever. So quite literally since the day I was born. So that's a little bit more background of how I got to where I am, and naturally how Josh and I have just always worked together.
Yeah, that's interesting. And the one thing that really stands out for me about what you said, and there's a couple of things, but the one thing was Lehman Brothers, right? I was at lunch with a buddy of mine who actually, he was the CFO of my company at the time. And we were watching the TV screen and all these people walking out of Lehman with boxes of all their stuff. And we hear that they're done. And I looked up from across the table and I said, we're screwed, aren't we? He said, yep.
That's exactly correct. It's absolutely true.
It was just, straight truth. So, the world has become an interesting place. So, hey, Josh, before you tell us about your background, what I'd like you to do is describe in one word your real estate investing strategy.
Simple.
Oh, nice.
In one word. Yeah.
That takes the complexity out of the whole deal, doesn't it?
Right. Yeah. So I'll give a shameless plug. We interviewed Lane Kawaoka on our Simple Passive Cash Flow. He was actually at the summit and spoke. Great presentation. And we tell our clients, like, what we do is not rocket science, right? This is not like, you don't need some special equation or a PhD or 3 decades of experience to go out and buy things at the right price, manage it well, learn along the way, right? Because you're going to make some mistakes, take some lumps. Find good mentors, right? Like you, Mike. Right. Find good mentors, find good people that want to share information, and just do and follow what they do. And the thing that I think a lot of people forget, you need to learn to give back, right? And that doesn't necessarily need to be monetary wise, which is great too. But find people that want to do what you want to do and show them how you do it. Yeah. Pull people along with you. And I don't know how many times we've seen clients or people that somebody they helped or somebody they knew gives them the call. I'm like, hey, I have this, my neighbor is getting ready to sell his piece of property. He doesn't want to list it. Would you be interested in buying it? And, you get to pick it up at, 10, 12, 15% below, market. Cause the guy just wants to get rid of it. But if you hadn't given back and done and built those relationships over time, you'd have never gotten that phone call, right?
Right.
So I just think, it really is simple. It's not that complicated. It just takes some work and a little bit of a know-how and a little bit of a shoe leather or elbow grease, so to speak.
Yeah, right.
Yeah.
So your backstory, how'd you get involved in this world?
Yeah. So, I flew airplanes for the Navy for a decade and did that. And I always knew I wanted to go into entrepreneurship. And me and two buddies. So in 2008, we had this great idea that we should start a hedge fund, right? Let's do that. So me and two buddies started a long short equity hedge fund and launched it on January 1st of 2009.
Yeah.
The best time ever to launch a hedge fund. Man, we're geniuses. Smartest guys in the room, right? And so obviously, you know how that went down. We kept it open for about almost 3 years and shut that down, gave our investors money back. It just wasn't, we were never going to be able to raise equity. And I went to work in the commodity and futures business, selling commodity and futures, and that industry really changed. And I really just started talking with clients, and I was like, what clients need is a full service plan. Because most people are always, picking one thing or, I'm doing this or I got this great idea, but they never see things through to fruition. And I'm like, we really need to teach people how to get from point A to point B, run the marathon. It's a long way, and, really help them make good decisions. Right. And so that's really, I have the heart of a teacher. I know Mark does too. And that's what we love to do with our clients is we're just there helping teach them, how to make good decisions. And I know that's what you do too, Mike, for your clients.
Yeah, education is really important, right?
Yeah, absolutely.
I think that, we can take in a lot of education, and the education itself isn't powerful unless you execute on it.
Sure, absolutely.
That's the other piece of the execution piece. Hey, let me ask, how does Kingsview Wealth fit into the multifamily space? And, I don't know who wants to tackle that, or you guys want to tag team on it or whatever, but how do you guys fit into the multifamily space, and what exactly do you guys do?
Yeah, well, we'll take that from and I'm sure Mark will dovetail on this, but we really look at real estate, right, as an asset class, right? And, I wouldn't say we're agnostic, but, everybody has a specialty, right? We have clients that love mobile home parks, or they love single family, or they love multifamily, or, we have some commercial. I know that's a little not in favor at the moment in the current environment. But we look at that as a tool, right? So it's another bucket of money. And really what real estate does, not only does it create cash flow, which is beautiful, but it's also is a great, I'm going to use the word tax shelter, but it's very tax efficient. And so if we can learn how to move money through our assets and work with great CPAs, we think that it just becomes this almost like a force multiplier, right? It's like putting your financial plan on steroids to really get clients to really want to be. And then it also creates distribution buckets and all kinds of stuff. We can talk ad nauseum about all this stuff, but we really think it's very efficient on the multifamily front and real estate in general on a financial plan.
Yeah, and there's also going to be, because as much as we encourage and educate people around getting into real estate, most people have some sort of actual stocks and bonds investments in their life at some capacity, right? Whether it's a 401k or an IRA from another job, and getting people to also really understand, the risk component, where it's like, hey, you're taking your risk in the real estate, and if you want to be heavy in real estate, I mean, we've run into clients who, they have things basically maxed out risk-wise on the real estate side, and they also have it maxed out risk-wise on the investment side. And when they tell us that their strategy is, well, I can't wait for the market to goes down and I'm going to go buy more real estate, that's where we get to kind of have the education of like, hey, we have to balance this out at some point. We can't be risky on both ends. So let's we really try and get people away from thinking about rate of return, because I just think that that's a silly thing to chase and look after, and start thinking about setting up opportunities, setting up like, okay, we're not going to win the rate of return game over here, but we are going to win the real estate game at some point, right? And then if we can also time this out to distributions or Roth conversions, now we win the tax game. And I'd way rather win real estate, and I'd way rather win tax than win a taxable rate of return, right? And so that's how we come in and just say, here's what your world looks like, and this is how, from a risk standpoint, we think this is more advantageous to be, how it should be set up.
So if you're setting up somebody's portfolio today, are you, do you have an allocation amount that you say, hey, you should be in this much real estate and you should be in this much stocks and bonds?
No, we don't. And the reason we don't is because it kind of depends on how much, stocks and bonds are easy, right? And I use the word easy is because it's pretty easy to buy a portfolio, at Schwab or Fidelity or wherever your brokerage house of choice is and let it sit there. If we have a client who is very active and they're like, hey, I want to build this and I'm really trying to grow, we think the real estate place is a really, really good place to do that. If it's somebody who's just, hey, I'm kind of in that distribution mode and I'm going to maybe start, either passing stuff off to my children, or we're going to start to, basically live off some of that stuff or just live off the cash flows. I'm not in growth mode anymore. Maybe we're shifting a little bit more in the stock and bond portfolio just because it is a little easier. And it's really client specific and client dependent.
Mm-hmm. As well as, this will probably come back into the fold, possibly after tomorrow, who knows? But we're recording at an interesting time here.
We're trying not to date this, right?
Yeah.
But, another aspect we look at when it comes to, just the financial planning is if you're successfully building real estate, you may have an estate tax problem, right? And so how do we set up the pieces to where we can, do some charitable planning that kicks back another stream of income or donate shares of stock versus cash, and there's some tax advantages there. So that's another area where it's like, hey, if we're successful and we beef this up, and if they start bringing that estate tax down to a lower threshold, those are things that, you're probably not going to get just talking to someone about stocks and bonds.
And it's also market dependent, Mike, and you'll agree with this is, markets fluctuate and things go up and down. And if, I have several clients right now that we're kind of sitting around on a little more cash in the investment world. If we get a pullback, we have the real estate market's gone crazy as of right now, but if we get any sort of pullback, right, in the real estate market, we're going to be an absolute net buyer so that real estate portfolio will actually substantially increase. Sure. Depending on what's going on, and that's just kind of, we don't know the future. We can't predict things, but that's, we're always on the lookout for that, right? We're always looking for opportunities and how do we flex and optimize this to what's best.
Yeah, you guys just, you've said some really good things, just like you can't predict the future. And too many investors, I think, sit back and say, oh, I'm going to wait for a good market or I'm going to wait for a bad market. I've made money in good markets, bad markets, Democratic presidents, Republican presidents. I know you guys were waiting for that one.
Yeah, no, absolutely.
So it doesn't matter, right?
It doesn't,
you can still make money. Here, I want to just back up for a minute because you talked about, you kind of alluded to the commercial space, right? And I know a guy right now that he's got this concept for a grocery store. So he's out buying these, I'm going to just call them broke down shopping centers, these retail places that are like 90% vacant. And he's got this design for a grocery store. He's going to go in and put a new grocery store in as the anchor in these shopping centers. And he's bought a wheelbarrow full of retail centers that are just like, they're on IV for sure.
Right.
And it makes me wonder, sometimes do people see things that we don't see, or are people just ignorant and not doing the right thing, And I think that sometimes people see things that we don't see. And that's why it's really important in our lives to have guys like you that can coach and train people in their financial arena to help them. Hey, did you think about this? Or did you look at this? If you had have you had an investor recently, and when I say recently, I mean, in the last 8 months, because of the way COVID is, who's gotten panicky or wanted to do something different that, any good stories like that?
Oh, go ahead, Mark. You take that one. You got a couple.
Yeah, I had one particular person where phone was ringing off the hook, and they were super heavy in real estate. They had about I'd say 8 to 9 million in real estate. Small family, all multifamily, and they had a portfolio of roughly 2, or I guess 3 million. And when COVID hit, we had everything scaled back, right? We had everything scaled back and everything was very conservative. And I had let them know because they wanted to be aggressive. I was like, you know, I'm not sure what's going to happen, but at some point, you know, because we had done the risk assessment and they had basically alluded to the fact that any downward momentum made them nervous.
Yeah.
And so, you know, sure enough, I mean, COVID hits and they're panicking and they're like, oh, we gotta sell things, we gotta move things all to cash. And we just had, you know, we had the conversation of like, look at your cash flow. The cash flow from your real estate is still paying all you need and more. Keep it, right? The account then bounced back plus some. And then we got to go back to them and say like, hey, if that made you nervous, then it's like, it could be a little too aggressive anyway. And if, you know, they're also thinking about buying more real estate, I was like, maybe it's time to move some, even though you're conservative, maybe it is time to, we didn't react heavily. We didn't sell and move everything to cash. Everything bounced back. You're now on the plus side again. But now let's go ahead and take, you know, I think it was about $700,000 that we moved over to a cash holding. And they're like, yeah, we really do feel like, because they wanted to get into commercial and they're like, we think commercial is going to be a good buy here in the next, you know, year. And so we got to do that. We didn't panic, sell everything while it was down, you know, because again, if you make that reaction of panicking and sell while everything's down, you're very likely to also panic that you just missed out on a bunch of growth and buy when everything's up. And that is doing the one thing that everyone knows not to do, which is sell low and buy high.
Yeah. So can you time the market though? I mean, really, realistically, can you really time the market?
I always tell clients that that's a fallacy, right? That nobody ever sold the S&P 500 or bought the S&P 500 on March 9th of 2009 at the all-time low and sold, when was it? About mid-February of this year at all-time highs, right? That was not a real person, right? That would happen to be one lucky guy that made a trade and one lucky person that made a trade, right? And so that's, you know, timing the market is a fallacy. I think you can definitely spot trends and there's definitely things that you see going on. But you know, you don't time the market. You get invested, you stay invested, you make prudent decisions, you make long-term goals and follow them, and then pivot if you need to.
And I would say that, you know, I think two people make money on Wall Street. It's either lucky people or patient people, right? You can be patient with the market. You can't time the market, but you can set up the right buckets to where you can be patient and just know like, oh yeah, I wish that I wasn't in that investment, but I'm not panicked because it's not, you know, it's not everything I am in that one particular fund.
Yeah, I think the key word there that you guys have both said it a couple of times is panic, right? You know, as soon as people start panicking, it's over. And then sometimes there's no rational conversation you can have with anybody.
Right.
You know?
Yeah.
Which I think if people just relax and sit back and get very realistic and think it through, you know, really look at what could happen or what might happen and think it through to the end, they might make different choices and different decisions.
Yeah. I think the rational man theory says, or the rational person theory, we keep having a growing population. So everybody needs a place to live. So you're going to keep growing and so real estate's always going to continue to grow and go up. Now, will it go up forever? Will it have dips and ups and downs? Absolutely, it will. But you know, over the long term, if you buy it right and do it right and manage it well, I won't talk in absolutes, but you're going to be okay at the end of the day.
Right.
Yeah.
So what pitfalls should an investor look for today in today's market? You know, if we can't time the market, you know, what should an investor keep his eyes open for a pitfall that might either be a good opportunity to come in the market or his timing to get out of the market?
Go ahead, Mark. I'm kidding. No, I mean, I think, you know, as far as a particular stock and bond, I don't think there's something, you know, everything's kind of, I would say, priced to perfection, maybe the last couple of days notwithstanding something. But I do think there's going to be lots of opportunities going forward in the affordable housing sector. As, you know, whatever happens with, you know, the current COVID situation and all of that, you know, we're kind of going to, you know, whether we're going to go into a depression or a little recession or a dip, whatever you want to call it, right? That people are still going to need a place to live, and affordable housing, you know, I think the market, the world has kind of shifted, right? There's either the wealthy, right, that didn't really lose their job. They're working from home, working from Apple, Google. They're still making their 150, 200 grand a year. But you have a lot of the lower people, and especially in the service industries, that lost jobs, but they still need places to live at affordable costs. And so those small multifamily units are gonna, they're gonna continue to be very viable. Now, as you know, Mike, playing in that arena has its own nuances and issues, right? So you kind of just got to be, know what you're getting yourself into. Hire a good coach. I think money spent on yourself learning and hiring people like you to coach you through these situations. And, I'll use the word old dog, and I only use that out of respect because you've been through so much and seen it, right? And get the advice from smart people. Be like, oh yeah, I saw something similar to this in the early 90s. I've seen this. Yep. Here's what I would do. It's not going to be the same, but it's going to be pretty close. And, do this, and then, talk again in 3 to 4 years, and you'll probably be pretty happy about it.
Yeah, absolutely.
Yeah. And I think from like a personal standpoint, like if it's a good time for a person to jump in or not, I think really it almost doesn't, it does matter on the opportunities, but it also matters on the, like, do you have a CPA and a planner and an attorney that are all on the same page? Because I know we've had scenarios where, the asset protection attorney said, hey, we want to get more into real estate. And we had positioned things like, hey, we think it'd be advantageous if you did this. But then the CPA said, well, you shouldn't do that unless it's structured this way, which then the asset protection attorney said, well, that doesn't work for asset protection purposes, right? So we all had to kind of talk amongst ourselves and find the good plan that was right for that person. Because that's another thing is you almost don't want to just go off a whim, because you may then hear back from your CPA that it's just like, oh, that just totally screwed up this over here, or, or what have you, right? So that's where you want to make sure you don't just have good counsel, but you have good advisors working with you who are all on the same page.
Yeah. One of the things I teach a lot about is team building and networking, right? And if you have an investor who's building a team and he's got a financial planner and he's got an accountant, he's got an attorney, those people need to be able to come together too for situations like that. Yeah. And I think that's a great example that you just gave of that, because if they can't work together when the time, not that they're always going to work together, but if they can't work together when the time is required, there could be challenges as a result of that.
Yep. Yeah. And the biggest mistake, we've seen this with clients, and the biggest mistake we see is a client goes out and does a transaction and they didn't consult anybody, right? Which it could have been a good transaction, but if the CPA is like, well, hey, if we would have actually pushed that out 1 month after the 1st of January, we could have asked the seller, we could have pushed, a tax bill off for 17 months, or we could have, done X, Y, and Z, or maybe we could have pulled some depreciation forward because you had a big win this year and another, and you're kind of fitting that puzzle piece together all the time, and just ask for help. Or we might just, or the answer might be, hey, just do the transaction. Good job, good find, and go forward. But just ask those questions.
Ask for help's a big deal.
Right? Absolutely. It's huge.
Do that.
Yeah. And Mike, I will say, and you probably get this too. You run coaching and you understand is sometimes don't be penny wise and dollar foolish, right? Don't, I didn't want to spend the $300 because my CPA charges me $300, every time I call him for advice, right? Now we can have a conversation of, do you have a good CPA or not with that conversation? That's a whole other part, but don't be like, oh, I didn't want to ask for tax advice because I didn't want to spend the $300. What if the CPA could have saved you, 25 or 30 grand, right? By just structuring a deal a little differently or in a better way. So, don't be the do-it-yourselfer, figure it all, just ask for help, and, and don't make those big mistakes, right? And that's what we try and really avoid.
Yeah, even way back when I was selling residential real estate, the client the buyer who was really worried about the 0.25% or the 0.5% on the mortgage rate, who was really going to be a challenge, right?
Yeah.
The whole thing, because when you worry about that little detail, 0.25% could be $8 a month. Is it really in the big picture of things?
Right. Yeah.
So, spend the $300.
Right. Yeah. Or he was going to save his 0.25%, but he was going to pay twice as much in fees, but he got fixated on that 0.25%. You're like, you're missing no. And speaking of the taxing example, we just had a client, they're doing a development up in northern Idaho, and they're the ground movers that were doing all the dirt work. They asked to not be paid until January 15th of next year, because they're having such a great year. They're like, hey, if we can push income into 2021, we'll do that. Wow. And so that was just another example of, being like, yes, take that deal all day long, right?
Yeah.
Push, they're happy, you're happy, and they already. So in the meantime, they were actually able to sell 3 more lots, right? Basically on a free loan of almost $500,000 for the dirt movers, because they're like, man, we're going to take such a big tax hit this year. We got to move this income into 2021.
Wow.
And so, but those are but obviously that dirt mover, right? The construction company was taking some good advice from their CPA and be like, hey, ask your client if they can pay us in 2021. That'd be way better. We could push it out. So those are having those smart conversations to save some money.
Good problems to have, right?
Right.
Especially in a pandemic year. I know.
Pandemic year. Absolutely. Yeah.
It sure takes the heat off when you say, oh, I can't pay you till January of next year,
Right. Yeah. Yeah. So, but that again, that's just good planning, right? And that's just good thinking things through and not having that, penny wise, dollar foolish mindset, and kind of that scarcity mindset of like, hey, let's push this out and make a good choice, right? Because think if that CPA saved that construction company 10% on that $400,000, that's a $40,000 plus hit, addition.
Right. Well, you have to look at the win-win. It's all about a win-win situation,
Sure.
right? So obviously the dirt mover is getting some reward for not taking the money this year, because their tax bill or something already this year is going to be offset or going to kill them.
Sure.
So how, in a situation like that, maybe he needs to buy some real estate or do a passive investment and put some money away and do some asset allocation or asset planning that's going to benefit him somewhere, right?
Yep.
So there's always the flip side to that. Hey, you know what? I know a couple guys that might be able to help you with that problem.
Yes.
So
yeah.
What do you see as a biggest pitfall today in the marketplace where we're at? Here we are, the end of 2020, right? Fourth quarter, the world's kind of been a crazy place the last several months. When we thought that things were going to be shut down for 2 weeks, it's been 8 months, and it's nuts, right? So what do you see as the biggest pitfalls or challenges for the real estate investor today?
I would say, we've run into some people who have still done really well, even during a pandemic. And it usually comes from a mindset of I'm going to find a way, I'm going to do it. Everyone has their struggles, and obviously not everyone can actually do it. But I think that, what was that? The harder I work, the luckier I get. That quote, where, there are some people who, they see what needs to be done, and it's kind of discouraging. And there are some people that see what needs to be done, and they're like, okay, well, if I wait a year, I'm going to be 1 year older and it's still going to be sitting there. Right. And so just the biggest pitfall is not actually starting the work and starting to stash money aside and finding ways to maybe make other supplemental income to start funding that first real estate investment property. Mm-hmm. Right. So, it was one of the things that Lane Kawaoka said on our podcast when we asked him, because it is one of those things where we're just like, what you do is simple. You have it all online. People can go online and go check it out and do it themselves. Like, why aren't more people doing it? And he's like, most people just can't execute. They come up with an excuse as to why it can't be them. And so they never start.
Yeah. The other one, Mike, too, is I think there's a lot of fear in the world right now. And I would say maybe not even for, that would be for good measure, right? I mean, there's, it's been a crazy year. 2020, you like to just strike that off the old calendar for a lot of people. But, we're coming into an election season, and we've had COVID and all this, riots and all that kind of stuff. I still think that after Election Day or whenever it is, the sun's going to rise again. I know it's shocking. The sun's going to rise. January 1st is going to show up. The world's still going to move forward. And so I think some people that, I will say stand in the face of danger, but I don't think it's that dangerous. But if you'll stand up and look for those opportunities and keep pushing forward, I think you're going to be just fine. So if you can kind of ratchet that fear factor back, a couple of notches, be prudent, be smart, maybe not go crazy. I wouldn't head down to the casino and put it all on black, this week, but, do smart stuff and keep it moving forward. I think you're going to be very happy with what you did in 2021.
And last, or just to tailor on that too, consistency. so many people get distracted in their strategy because they're like, hey, this is a new shiny thing. I'm going to chase this. And now I want to chase this. And now I want to, and they're always being pitched like a different opportunity, and finding what you're comfortable with. And this kind of goes back to what, Josh was saying earlier, where it's like, hey, do something, take your lumps, learn from it, grow, move forward. When you take your lumps, that should be, how can I hone in what I'm currently doing? Not let me run the opposite direction and do something completely different, right? Because you see that too, where people are like, well, I would never do that again. It's like, well, but you already learned how to do it the worst way. Now do it the second, now do it a little bit better, right? And you know what to look for. So consistency is definitely something that I think holds people back.
So Mike, let me ask you this question. It'll tell you what we're talking about is, what do you tell your clients that you're coaching the first time they have to evict somebody?
The first time they have to evict somebody?
Yeah.
I teach them the process and tell them to go execute and do it.
Right. Exactly. Right. And the first time it kind of sucks, right? For the client, they're like, oh, I've never done this before. It's a new process. Now the 5th or the 20th time they've done it, you're just like, well, we just go do the process and I work through it, and I budgeted for it and I put it into my business plan, and we just make it happen and keep moving forward. It's not the end of the world. Right. And that's that scarcity mindset that people need to get away from, of like, it's part of the world we live in, and you just keep moving forward.
So, it's a lot about the fear, right? And you said that. So I think people get, they get nervous, scared, and they lock up and they can't move forward. Quick story, when I was selling residential real estate, 75% was with investors. My business was investor-based business. And on Saturdays, I would have a bus tour, and I'd put 8 or 12 investors on a bus, and we'd go look at 2 new construction properties and 2 properties that, just needed a little cosmetic stuff. But the last 2 properties we'd always go look at were good foreclosures. I mean, really beat up, run down, mold, vacant, boarded up. And we would walk in and these people would just say, I can't do this. And now you got to push them over that edge, right? To say, yes, you can. And it's just fear. And it's the fear of the unknown. Until you get that first deal done, then your whole life changes.
Yeah. Then after that, you start to see that mold is a gold mine, right? Or or the rotten floor is that's worth 30 grand right there.
Love asbestos today.
Yeah. That's right.
Yeah, and that's a story for another day too. So what do you think an investor should look for today coming into the market as a new investor?
Go ahead, Mark.
Coming in as a new investor, well, I'm kind of going off of one of the podcasts that we just did where again it was Lane Kawaoka, and he was talking about people who are starting to get trying to get started, and he was saying your profit margins on Class A, don't look for a place that you would want to live, right? He focuses more on the B class, and he's like, try and find a place that has a roughly 1% rent to value ratio, right? Just as a way of first initially looking at it, he's like, you've got much lower capital that you need to put up forward to get into the property. And so it's easier to buy $120,000 home than it is to buy the $400,000 home. And, you're probably going to get, $1,000 or, $1,200 on the $120,000 home. You might get $1,800 on the more expensive place, right? So if you're just starting, that's I take his advice, right? Like I think he's a smart guy, and as someone who hasn't started building the real estate portfolio that they can start leveraging, that's a good place to at least start looking. Yeah,
and really, it's just getting over that fear and just doing it. And you're not going to get rich off your first deal. Every once in a while, that person, they have that one buddy that gets lucky and he makes a whole bunch of money on his first one. But you're looking at that slow build, right? I always jokingly call it the 10-year overnight success. It just takes a long time to do things. And, especially if you're building that long game real estate portfolio, most likely you're not going to be incredibly wealthy in 3 years. Right. And you're probably not. I'm just being honest. Yeah. But in 10, 12, 14 years, 20 years, they're going to look back and be like, wow, I made some really good decisions and they're paying off big time right now.
Hence long-term, right? So let
Absolutely.
me ask you guys, where's Kingsview Management's vision for the next 3, 5, 10 years? Where do you guys see yourself as a company fitting into the marketplace and grow where your growth is going to be?
Yeah, and we really want people to see that there's, you don't have to be a binary investor, right? You don't have to be all real estate. You don't have to be all stock market. There's a lot of ways for you to make money out there. You need to be diversified, but in a way that's tax efficient, so that you can actually grow those assets, because everything moves and goes up and down. And if you can find a way to do that, and then hire a good team. Me and Mark are passionate about working with a good CPA and a good attorney. I know that's basically attorney is like a 4-letter terrible curse word, but find a good attorney that you can work with. Find a good CPA that you can work with, because the advice they give is going to pay off in spades down the road.
Yeah.
So that's kind of where we're moving our business to kind of have it what we would call a virtual family office, or basically a small family office for the common person.
Yeah. And I think that there's a niche in the marketplace for that, right? Because you're not talking about the totally high net worth individual, right? You're talking about the average investor.
Yeah.
Mm-hmm.
Those people making the $100 to $400,000 a year, maybe even a little less, but they want to build that portfolio. They want to work hard. They have kids and families, and they coach soccer, and they do all their things, and they just want to, they want to be able to retire at some point. And we really think that the cash flow that real estate, the opportunities it has is just it's something you really shouldn't pass up. You shouldn't overlook it.
And because of COVID and everything shutting down, everyone's a Zoom master now. Everyone works virtually. So, we tell people like, hey, there's no, I don't care if you're in New York or Chicago or Seattle. I don't care where you are. I should still be able to talk to your CPA. He should be a master at Zoom by now, right? So like, let's get us synced up. We'll have a discussion. We'll talk about what you're doing. And I don't see any reason why we can't do that forever moving forward. So.
Hey, if we would have only known in March that we should have went and bought some Zoom stock.
Right. Yeah. No kidding.
Hey, so there was someone else who actually had the ticker symbol ZOOM, and their stock skyrocketed, but they are not Zoom.
Oh, really?
Yeah, it was a small.
I know, they're probably sitting there like, don't tell anyone. Don't tell anyone.
So guys, this show is called Insider Secrets, and we're here every Tuesday. And what we want to do is we want to try and give some really good, in-depth, drilled down insider secrets. So before we start to close out here this afternoon, what would you say is one good tip that you could give the real estate investor today?
Well, first I'll clarify that it's insider secrets and not insider trading, because we are licensed. And
oh God,
these are secrets. They're not insider trading, but I would say one really good thing to start looking at is Roth conversion and spend down strategies. So you're probably going to have a 401k. You're probably going to have an IRA and some investable assets. You can if you are able to be successful in real estate, you can really start getting those out of those investments at very low tax brackets. And so I would say on top of the real estate development, start reading about tax efficient retirement. How do I drive my not my passive income, but my ordinary income tax bracket down to zero, right? If we can do that, then we can really do some sexy stuff financially.
Great.
Inside, I'm going to go with accelerated depreciation.
Mm-hmm.
If you're especially when you start to get into that either the multifamily or commercial, Mike, kind of your specialty, that is just a huge underutilized area that most people don't take advantage of, and there is lots of opportunities to get either a cost seg study done, or depending on the asset, some accelerated depreciation. And maybe you don't take it this year. You look at a year when you're going to have higher passive incomes or something like that. Again, get with your CPA because they'll help you with this. But really use that as a great tool, because if you can save yourself $20, $30, $50,000 in taxes, that is a big deal.
Yeah, and I think we could do one whole show just on accelerated depreciation, because when have you ever known the government to give you a gift?
Right.
And there you have it, right?
Yeah.
Is depreciation. So,
And Mike, if I can dovetail on that just a little bit, the problem is most CPAs, I call them tax preparers because they're really not a CPA if they just file your taxes for you. A tax planner and a good CPA will do that planning.
yeah,
They should know that stuff and they should be bringing that to you. They should be telling you, hey, you own this real estate. We need to look at doing this. We need to look at doing, an accelerated depreciation, or can we do a cost saving study? And they should be bringing that to you. You shouldn't have to tell your CPA to at least bring that to the table. You really shouldn't.
interesting. So, you guys on a lighter side, let's just, I know that you're in two separate locations. Mark, you're in California, and Josh, you're down in Mississippi. Here's what I want to know: where you're located right now. What's the best tourist attraction where you're at?
Well, I mean, the most common one is, Tahoe, right? I mean, everyone loves Lake Tahoe and hiking, Castle's Peak and some of the stuff around there. I would say if you talk to some of the more locals, they'll give you the in on a few off the beaten path attractions, right? So I know up where Josh and I lived, there was something called Smarts Crossing, and it is where Mr. Smarts, back in the Western expansion, actually built a bridge for covered wagons going over this canyon.
Uh-huh.
It's gone, but the 26-foot cliff into water is still there. So, I mean, you can find a few more, if you go searching online, you can definitely find some off the beaten path locations too you can hike to.
And Mark's being modest. I know you wanted to mention a couple of breweries because he's our huge beer aficionado. So right by where we live, there's some great breweries. So
yeah, if you could go to Knee Deep or Moonraker, Crooked Lane, all great places here in Auburn.
Right.
So I'm actually down here in Gulfport. Me and my family are getting up tomorrow morning, driving to go spend 3 days in New Orleans. So I will be tomorrow night, if all goes well. I'm going to have my own personal dozen set of oysters at Acme Oyster House on Bourbon Street. And then we're going to follow that up with some chicory coffee and some beignets at Cafe Du Monde. So that is a for sure must do in New Orleans.
Absolutely.
Yeah.
That's great because my next question was favorite restaurant. So you just kind of hammered that. So that was good. Hey guys, if our listeners want to get a hold of you, they want any more information or planning strategies, how do they get in touch with you?
Yeah, well, you can check out our podcast. So our website is wealthpreservationpodcast.com. You're going to have the full lineup of entrepreneurs, their stories. We actually have some of the tax strategies episodes up there as well. And then all of our info is there. So you can reach out. You can also, follow us on LinkedIn, Twitter, Facebook, all of the good stuff, all the social medias. And then our email address, mine is my first initial, last name. So mseither@kingsview.com. And it's going to be the same structure for Josh's email as well. But definitely go check out the podcast. And there's a couple real estate specific and tax specific episodes on there.
Well, I appreciate you guys being here. Thanks for taking time out of your day to meet and to carry some good information to my investors and the listeners on this podcast. And you guys remember Kingsview Wealth, you can find them on the internet. I want to thank you for being here. If you guys want to say goodbye real quick.
Yeah, have a good one. Thanks for having us on.
Thanks so much, Mike. We appreciate
we'll be here
it.
next Tuesday again. So have a great afternoon and the rest of your day, everybody.
Thank you.
Perfect.